It is time to start paying attention to what is going on because there are definitely some signs that there could be a big correction coming anytime soon. Stick around, should be a great video today. Hello, my YouTube friends. My name is Adam Kahn, and this is Dividend Retirement. Forgive the weird look, I'm trying to remember. Somebody pointed out to me that I have to do separate videos if I have two different sites, and I'm working on a new one, which, forgive me, I don't have a lot of followers yet, but I really enjoy doing this stuff. It gives me an outlet for where I can speak. And today I'm going to be a little bit doom and gloomy, I guess, which is not typical. But there are definitely signs that I'm seeing that are showing that there could be a big correction coming anytime. And the two things primarily that I'm watching are Bitcoin and the metals. And I know those things could be like extracurricular things that really move on their own and have nothing to do with the equities, but I'm also noticing some cracks there as well. So here I am, Sunday, February 1st, unshaven, which is not typical. Generally, when I do a video, I like to do a quick shave. Anyway, what's bothering me about the markets is the move in metals in both directions have been extreme. And generally, it's something to pay attention to. And I don't want to go overboard or anything else. It just tells me we might be in a risk-off type of scenario, and those things can last a very long time. And what do I mean by risk-off? When things get a little bit too frothy, whether that means, I don't know how to explain it, what I consider like gambling type of investments, meaning people aren't looking at valuations, they're not paying attention to earnings, and they're not paying attention to anything. They're just making gambles to try to make as much money as quickly as possible. And I get it, we all want as much money as possible, but when I see metals and Bitcoin behaving the way they are, as well as what I consider risk stocks, things like HIMS, SMCI, AppLovin, beginning to show some cracks in the system, it just wants me to pick my head up and pay a little bit better attention to keep an eye on what's going on. Now, there's a guy who watches my other channel who's super doom and gloom, and I've been listening to super doom and gloom for years now. But the thing is, they have a lot of very good points that actually are important, so you don't want to ignore them. Now, as always, this is not financial advice. Please, you should not be listening to me. I am not a professional financial advisor. You need to do your own research when it comes to making your investments, and you shouldn't be listening to me or anybody on YouTube for that matter. And my advice is reach out to a financial advisor and get advice from the professionals. Now, it bothers me that everybody is flocking into the same investments, and that tends to be a big mistake because when things get oversubscribed, if they start getting undersubscribed because people get nervous and want to get out, it goes too far in the other direction as well. And what are the things that I'm looking at? Well, these ETFs concern me, especially the ones that are high dividend payers that talk to people about retire soon because you can get a better payment than the old-fashioned 4% rule. Well, sometimes those old-fashioned, boring old rules are there for a reason, and they're protectionary. So I've watched people flock into these attractive high-yield dividend-paying funds. I'm watching them even flock into VOO and QQQ, which, don't get me wrong, I think these are actually really good avenues for people to be able to invest who don't pay so much attention. What I do worry about is the oversubscription to them. And then at the same time, what's getting undersubscribed? Consumer staples, boring stuff that nobody pays attention to and nobody cares about. Companies like Campbell's Soup, which is what I've been buying recently. Companies like Conagra, companies like Hess Midstream. Chevron's gotten some information lately because of what's going on in the world, but these big, boring old companies that nobody wants anything to do with because they underperform and they suck, and I should just put my money in VOO and QQQM and I'll do better than doing anything else. Well, maybe that's true, but considering the high percentage of Mag 7 that is in those things, and they overlap each other at this point significantly, it does make me concerned that if people start going towards the door, that door is going to get pretty narrow as everybody's rushing through it, pushing those things to below value and making people really concerned. Now, or confused, not concerned. Now, that being said, the reason I say it's not financial advice, I've seen people flock towards cash many times to be very wrong. So when I'm saying the things that I'm seeing, the reality is they haven't cracked yet. But the signs are there to pay attention to it and be aware of what's going on and recognize that things in the markets can change rather rapidly. And if they do, the earnings that we're all relying on and the predictions aren't such great predictions. First of all, nobody can predict the future. Tell me what the weather is going to be a month from today, and I'm guessing you're going to be off a bit. It's the same with the markets or anything else. And when they're making their predictions, it's based on the information they have readily in front of them, algorithms, and they're usually pretty good for the information provided. What they don't have is if the economy starts correcting and the values start falling, people start to get nervous at that point because they feel less wealthy. They start tightening their belt, so they're spending less, which then impacts the earnings and throws off all of the analysis of expected earnings going forward. The other thing that I worry about is all these big companies that started investing and spending in each other. Will that money really come to fruition? And is it real money? And are they borrowing in order to do that? All of these things have me concerned. Like, if I'm company A and you're company B, me investing $100 million in you so you can buy $100 million worth of stuff for me, did we really create anything, or did we just make up fictitious numbers to show these investments in both of us? I don't know the answer. And I guess if it pushes along and they actually spend that money on both sides, maybe they've doubled the flow of money, because if it allows my company to start spending $100 million as well as your company to do the same, and it goes out into the economy, well, maybe that helps push things along. At the same time, if we see some unemployment and we see things begin to slow down, look out below. I would just be a little bit cautious of what's going on. Now, what am I still investing in? Kind of what I said earlier. I've bought some Campbell's, I've bought some Procter and Gamble, I bought some Clorox, just boring old companies that I figure will continue to chug along no matter what's going on in the economy. Now, they might get pulled down as well, especially if it's a big bad correction that I expect that everything could get caught in. I just don't want to be 100% in cash, because I think that's a mistake as well, because I do want to participate in the market, because markets tend to go up over time. Now, if they're able to pay those dividends, especially as things slow down and interest rates get cut and it becomes harder to get money from things, I think it could be a surprise and they could actually do okay. Now, let me play out the scenario if this happens of what I envision potentially happening. Now, again, this is not necessarily what I think will happen. It's the signs that I'm beginning to see that have me concerned. When I look at silver, it's gone up from $30 an ounce. Well, there's no reason in my mind it couldn't go back down and at least test that level. And if that happens, odds are it probably breaks through and sits there for a very long time before going back up. That tends to be the historical trend of silver. And go look at a chart. Tell me what you guys think about it. Similar with gold, but less dramatic type of move. Now I'm moving forward and looking at Bitcoin. So we had silver move up parabolically last year. And then on Friday, which was the last trading day of the month, it corrected something like 30%. It was just an absurd move. Silver doesn't usually move like that. I think if I read correctly, gold lost $4 trillion and silver lost $2 trillion. Those are massive amounts of money to move in 48-hour type of time frames. And a lot of exchanges, and I don't mean actual exchanges, a lot of places that buy and sell gold, they actually stop trading, or they widen out their market immensely because they were too nervous to take either side of the trade, which doesn't really surprise me, but it tells me that there's some real nervousness going on. Then this weekend, Bitcoin, which was already struggling, fell below $80,000 a coin. Now, I started looking at a chart out of curiosity. It looks like it really has to get below 74,000 to breach a level where it really has more downside to go. Now, this is all like witchery, throwing things at a thing and scraping around like in that Robin Hood movie to make a guess. So don't take it the wrong way, but there's certain patterns that tend to repeat themselves. Did I say send? Tend to repeat themselves. One is called a head and shoulders. What it looks like on the way up is, the chart kind of makes a shoulder where it kind of goes up, comes down a little, and then goes up to make what would look like a head. And then as it comes down, it stalls at where that first shoulder was made, pops up a little bit, and then takes time before it falls below. And if it gets below the shoulder line, it can make the same length of move that it made from the top of the first shoulder to the top of the head. So first shoulder is made, goes up to the top where it's making the head, falls down to the shoulder, whatever distance that is. If it breaks the line of that shoulder, what they're saying is that first move from the shoulder to the head is the same move it can make towards the downside on the way down. Now that works in reverse as well, but that's what a head and shoulders looks like. It tends to repeat commonly. No guarantee, but I did notice it in Bitcoin. And if it fell from 120 to 74, that is a massive move that implies if it gets below that first shoulder height, that it could get down into the 20s, possibly even below 20,000, which I know sounds absolutely ridiculous, and it is just based on that charting, but Bitcoin really could go to zero and it could go to a million. I try not to make any Bitcoin predictions because, A, despite it being around for a little while, it is super new and there is nothing to really gauge its value or anything else. No different than gold or some of the other commodities that have very little intrinsic value, just the value that we give to it. So Bitcoin wouldn't surprise me in any direction. And when I overthink it, like, I don't know how far they'd have to push it to squeeze a guy like Michael Saylor, because generally when people become that much of a believer in something, even when they're right, they're wrong long enough to squeeze them out of the trade. Not always. So I see these things going on. Then I pick my head up and I start looking on risk type of equities like hims and hers, which I mentioned on my other channel, getting below $30. I'm guessing if I looked at JOBY or LAC or some of the others that kind of got involved there as well, I bet Open Door, I bet all of these things are beginning to really struggle. And when I see the stuff that is risk on type stuff start to struggle, sometimes that actually draws down on the things that are still risk, but a little bit more risk. I've noticed it with AppLovin. My buddy Steve loves to trade AppLovin and the things that are super volatile. I think it got up to like 700 or so at the highs. It started to fall, and he's looking at it based on where it was previously, thinking it can't get below this or that because it stopped there before. Well, those risky assets can really fall an awful lot further than people expect, getting to the point where they finally shake everybody out of it, where they finally stop trading them. Now, eventually, over time, fundamentals take over and values are values. And if the company is profitable and growing at a certain pace, it will catch itself and begin to go back up. However, that could also take years before it gets the froth out and scares people out, even to where it becomes an unbelievable bargain and it sits at the bottom for a long time. Again, I don't really want to say I'm making a prediction. I'm just saying there is a lot of froth out there, so to be aware and be careful. I wouldn't have a lot of credit card debt or any debt for that matter, but especially those high yield ones, I would try to put myself in a position where I'm making plenty to cover my bills, that I don't have a ton of debt, that I'm not borrowing for cars or whatever else. Because if there is a correction, things tend to take time. The Fed is always late to the party because they're waiting for the data to show. The data doesn't show immediately. By the time it shows, they're already too late. People are already struggling. Corrections are already happening and things are moving along. I hate to be so big and scary, and it hasn't gone to where I think we're at the point of no return. But there's so many signs that I'm looking at right now that it just makes me pay better attention than I was, if that makes sense. Even to the point, so there's a guy I watch on YouTube who I really like his channel. He talks about real estate here in Las Vegas. I think that he's a really good guy and he gives the best advice he can. When the market was going higher pretty strong, he was fighting it, thinking it was going to have a big correction, that things were terrible because all the news was talking about it. Well, he has flipped his script, and it's gotten to the point, because we tend to banter a bit when I thought the market was going higher, and now I'm pointing out things to be careful of, and now his discussion is with the spending and with the cutting rates and with all this stuff, it is just going to go higher. And what I can tell you is markets are markets. They go wherever they go. There is no way to always be right or know what's going on. But whether they cut rates, whether they spend money, no matter what's going on, it is no guarantee that it will just go higher. And if these things are finally stretched too far, well, they could legitimately correct. If rates come down fast enough, it could catch it. But what I envision is metals could fall, Bitcoin then falls. It starts dragging down the equity market, which in turn starts putting pressure on the housing market. And all the things that people have been talking about the past 4 or 5 years could finally come to fruition, causing the correction that people have been expecting. That's nothing to be scared of. Again, if you have your job, you're paying your bills, and it's nothing that's in jeopardy, I would just keep living one's life and continue to invest, because it'll put you in a position that maybe you pick up some deals. If you're over leveraged is where I would be cautious. Now, the administration that's in place will do everything they can to stop that from happening, which is why they're talking about cutting rates and the other things to make housing more affordable. But I've talked on my other channel about the things that they do to try to make housing more affordable. Generally ends up making it less affordable because it pushes the prices higher. What they really need to do is work on the supply side of things, ease up the licensing, and allow places to build quicker to meet the demand. Constantly giving incentives to the demand side keeps propping up the supply prices instead of doing what they hope to, which is really making it more affordable. Unfortunately, more affordable means prices have to come down in reality. And for those who got too leveraged, that's what ends up creating the opportunity for the next cycle and for the next generation is when they panic and get out at bad prices, that creates the opportunity for those who couldn't afford it when it got too expensive. Again, I don't know that it's going to happen, and maybe we just stay unaffordable for a very long time. Plenty of countries have houses that are super unaffordable, and generation after generation just doesn't own homes, so maybe that's the direction we go. So now that I've given this really long rendition of what to pay attention to, what I really think is going to happen come Monday morning is we'll probably see Bitcoin back above 80,000. We will probably see silver and gold and the others have caught themselves and people have relaxed and they start to go higher. I do think it being the end of the month probably had a major impact as to why those markets corrected. And I think it stays a bit of a risk on scenario where you want to stay invested. I really only point out these things as something to be cautious of and be aware of because it's not like we can't have a real correction. However, I think most people have a steady job. I think that the inflation sucks, and I think they continue to spend. And as long as nothing changes in that scenario, nothing should change in any of the things, and people should be able to stay invested. Again, this is not financial advice, just my prediction that I think the economy is doing okay despite all the nervousness, despite the cracks that I see. And it really is just a little asterisk of pay some attention to what's going on, decide what you'd like, and my suggestion for everybody, and it's kind of what I've always said my goal for the channel is, and I'm not sure which video I'm going to post on which channel, so if it doesn't make sense, that's the reason why. But my goal is to try to get people to continue to invest no matter what's going on. It doesn't matter if the markets go up or down. It really doesn't until you get to retirement. And if the markets go down and you're young and you have plenty of time, that's an opportunity to be picking up more good quality companies at better prices, and you'll have more shares, which is really the goal by the time that you come to retirement. Outside of that, I wouldn't worry too much. It is what it is. It's something that none of us have control of. I just point it out because I see some things going on that make me pay a little bit closer attention than I sometimes do, and we'll go a little bit risk off for a while. Anyway, I hope everybody's weekend was great. I took my son snowboarding yesterday. We do that each week for the most part. We have this little hill up here. He's really enjoying it, and it's super cool. For those of you who don't know, I also have another channel. If this is the one that I put on dividend retirement, because my goal is to rotate into more dividend stocks and less growth as I move towards retirement. But either way, um, whichever site I put this on, for those of you who don't know, Investing with Adam K. I will try to put a link in the descriptions on both videos. I never remember, and I am a computer idiot. But on Tuesdays, I do a live as well. I really like the Platinum for the live channel because it allows me to kind of talk back and forth, especially with this guy Joe, who's super doom and gloom. Either way, anybody who can make it, I know the time sucks because a lot of people work and it's the middle of the day. That is partially my own selfishness and that I can work from home. So it gives me an opportunity when my son's at school and my wife is busy with her stuff, that it's just easy time for me to sit down with a camera and do the live. Anyway, I hope people can make it. The weather's been so nice. I'm tempted to do it outside. The nice thing about doing it inside is I have my computer so I can look at stocks if people have questions or want me to take a quick look and do an analysis on a stock. Now, keep in mind, I have a very small scope of stocks I keep an eye on because I try to stay in my lane of the things that I'm interested in. I have a small list of stocks I want to own, and I keep an eye to feel like when they get discounted to pick them up and go from there. Um, so I may not be aware of the company, but I can at least pop online and do a quick search and check earnings and things like that and see if I have an opinion. Either way, hopefully some of you can make it on Tuesday. It's Tuesday, 11 a.m. That's Pacific time. So what's that? 11, 12, 1, 2 o'clock Eastern time, if I am correct. Um, but I really do enjoy the live platform. I'd like to do more of them. Anyway, have a great Sunday. I hope you had a great weekend. And I'm sure I'll post more videos. I don't know that I'll have the patience to do two like I did today, but I will try my best. Bye-bye now.